Katie, you picked the wrong day to be here.
I am thrilled to be here, actually. I hear we have a really busy earnings schedule. We, of course, are waiting for Tesla, and it's a big down day in the market. Guys, we have so much to talk about.
It's not just Tesla, but, Tesla is certainly the focus. We got T-Mobile, Western Union, Whirlpool, Lam Research, Viking Therapeutics, IBM, Las Vegas Sands, and more, Scarlet.
Yeah, it really feels like the election is getting closer, too, with so many people trying to put on Trump trades or talking about it in a way that they weren't just 2 or 3 weeks ago.
It's kind of interesting, too. Yesterday, we were talking about this idea of those back-to-back declines that we saw in the S&P. First time that happened in 6 weeks here. But, of course, now we're setting up for a trifecta of declines. And depending on how things shake out over the next, 45 seconds here, it's possible the S&P could drop 1%. Again, something that it hasn't done in about 5 weeks or so.
So what would that mean if that does happen?
I don't know. You tell me.
Well, we've had this sort
out?
of relentless rally over the last 6 weeks, right?
Yeah.
We're up more than 20% on the S&P 500 for the year.
And you give back 1%.
Give back 1%.
Yeah, absolutely. I mean, you're right. I mean, at the end of the day, this is a blip. I guess the concern is, does this turn into something more?
Yeah.
Is this just people kind of moving to the sidelines in anticipation of the election and not wanting to be exposed? Who knows?
Or it's a shift in momentum, and those are things that you only realize after the fact.
Absolutely. Here, as we get the closing bells here in New York, and again, I just want to reiterate this here. This is not panic on the street. You had a healthy number of stocks that did move higher on the day. We'll get to those in a second. But the aggregate effect of what we saw today was red across the screen. The S&P is going to avoid that 1% drop. Remember, it hasn't had a 1% move up or down since at least September 19th. It's going to finish the day down today by about 0.9%. It's 0.92%. Tim Stenovec, I know you're precise. In that case, we round down to 0.9. The Dow Jones Industrial Average, the Dow Jones Industrial Average down 0.96%. We'll just round that up. That's a 1% drop. The Nasdaq Composite down 1.6%, and the Russell 2000 going to close out the day down 0.8%.
Okay, rounding with Romaine, I want to look at the S&P 500. You had 182 stocks move higher today. 316 stocks, Scarlet, moved lower.
Yeah, not a lot of need to round off the numbers here when you look at the sector performances. The worst decliners all down by at least 1.4%. The best performers, REITs and utilities, so rate-sensitive sectors, each up by 1%.
All right, let's look at some of the companies that ended up moving higher today. I do want to start with Spirit Airlines, ticker SAVE. They jumped, reaching their highest intraday level going back to August. The Wall Street Journal reported that Frontier Group Holdings is exploring a renewed bid for Spirit Air. Wall Street was positive on the news, saying that a combined Frontier and Spirit would create a stronger low-cost airline, potentially challenging larger rivals. Look at that, shares higher by 45% today. And AT&T, ticker T, they moved higher after the company gained more mobile subscribers in the third quarter than analysts expected. Shares rose 4.7%. The company added 403,000 net new monthly wireless phone subscribers. Analysts were looking for 394,600. That's according to data compiled by Bloomberg. And finally, Texas Instruments shares rose after the chipmaker reported third quarter results that beat expectations, up 4% today. They did give that disappointing forecast, but the third quarter results overshadowed those. The CEO said there's not much left in inventory correction. That's about time for a rebound, though. One hasn't been seen yet, Katie.
All right, let's get to some of the decliners today. Plenty to choose from. I wanted to start with NVIDIA, of course, having a down day.
So I'm just going to interrupt you for a second.
Go
Since
ahead.
Tim was going all in on AT&T, why not talk about T-Mobile a little bit here?
Because they're doing earnings now.
They actually just came out with their earnings, just crossing the wire. Their third quarter numbers on an adjusted basis, $8.24 billion in terms of EBITDA. That's a beat on the street. Postpaid phone ARPU, $49.79, a metric that a lot of folks pay attention to. That's also a beat on the street. Total revenue, $20.16. And the bottom line, $2.61 a share. Those are all your 3Q numbers, and they all beat the guidance for the full year. The company saying that it anticipates that its full year core adjusted EBITDA, a lot of qualifiers here, but they're looking at 31.6 to 31.8 billion, which is just right around, Katie, what the street was looking for.
And you can see the shares now firmly moving higher. It took a second for traders to decide what they wanted to do, of course, with that guidance raise. Currently higher by about 3.6%. The bar was already high for this company. T-Mobile shares up almost 40% year to date through today's close, now moving higher, Scar.
Yeah, it's interesting, especially with Verizon reporting revenue that missed estimates because people were not necessarily upgrading their phones. That you have T-Mobile, which is the smaller rival, giving a forecast that really encourages a lot of excitement about where it stands.
Yeah, T-Mobile CEO Mike Seibert saying that delivered another quarter of industry-leading results. Our best third quarter postpaid phone net adds in a decade. Record low third quarter churn. It translated to outside plus-size financial resorts and empowered to raise 2024 guidance yet again, Romaine.
Tesla earnings now crossing the wire. Third quarter adjusted EPS, 72 cents a share. The street was looking for 60, a big beat on the bottom line. On the top line, $25.18 billion in revenue in the most recent quarter, relatively in line with estimates. The street on average was looking for 25.43. Gross margins at 19.8%, well above street estimates of 16.8%. And cash flow in the most recent quarter also coming in, guys, well above the street estimates, $2.74 billion. The street was looking for 1.6.
Yeah, so big beat there, especially when it comes to adjusted EPS. I'll just read that again. 72 cents. The estimate had been for 60 cents in the third quarter. Tesla also expects slight growth in vehicle deliveries in 2024. And you can see that reflected in the shares right now, moving higher. It's been a really, really rough ride for Tesla this year, but shares currently higher about 5%.
And the number that everyone's paying attention to is gross margin. Gross margin 19.8% for the quarter. Analysts were looking for something just under 17%, 16.8%. We'll need to back out what it looks like when you look into just the automotive gross margin x the regulatory credit. What analysts are looking for is something in the neighborhood of 14.9%. Tesla also expects slight growth in vehicle deliveries in 2024. This is after third quarter deliveries was seen returning to growth. So this is encouraging, certainly, for those who are looking for Tesla to recover.
I'm trying to make it through the third quarter update deck here. It says that the company, despite sustained macroeconomic headwinds and others pulling back on EV investments, Tesla remains focused on expanding its vehicle and energy production lineup, reducing costs, and making critical investments in AI projects and production capacity. They say, we believe these efforts will allow us to capitalize on the ongoing transition in the transportation and energy sectors.
All right, I'm going to jump in here and just take us away from Tesla for a moment and look at Lam Research in the semiconductor space. First quarter revenue was $4.17 billion, higher than what analysts were looking for. Adjusted EPS of 86 cents, also topping the average analyst estimates by a nickel. The stock right now moving up in after-hours trading as we await any kind of outlook.
Mattel also crossing the wire right now. Their bottom line, a big beat on third quarter adjusted EPS, $1.14. The street was looking for 94 cents. Top line sales, $1.84 billion, just a touch below what the street was looking for here. Gross margins also coming in above estimates. And here's your guidance going forward. The company says it sees full year adjusted EPS in a range of $1.35 to $1.45. The street on average looking for $1.44 here. And the company now saying that it is looking to try to find a way to cut costs here to boost profit going forward.
All right, I also want to bring us Las Vegas Sands, just a flurry of earnings, and you take a look at adjusted EPS coming in light in the third quarter, coming in at 44 cents. The estimate had been for 53 cents when it comes to net revenue as well for Las Vegas Sands in the third quarter, coming in at $2.68 billion. That is light versus estimates of about $2.79 billion. You add it together, shares currently off about 3%. Las Vegas Sands missing on several estimates there. All
right, I'm looking at Whirlpool shares unchanged in the after hours right now. The company still sees fiscal year free cash flow about $500 million. That's just shy of estimates of $513.3 million. Sees fiscal year revenue of about $16.9 billion. That comes in above estimates of $16.7 billion. Third quarter net sales coming in just shy of estimates at $3.99 billion. And then third quarter ongoing earnings per share coming in above estimates at $3.43. Once again, shares unchanged in the after hours.
All right, and a quick mention here of Viking Therapeutics as well. Third quarter revenue was $0 compared with $0 the same time last year. That does match analyst estimates. We need to look into that a little bit further, but this is a company that also lost money. Loss per share was 22 cents. Analysts were looking for a loss of 25 cents, so it was narrower than anticipated. The cash and cash equivalents, important if you're not making any revenue, $50 million in the quarter, up 35% from a year earlier.
All right, let's take a quick look at Western Union. Shares not doing a whole lot here, but the numbers are out in line on the revenue side at right around $1.1 billion. EPS relatively in line at about 46 cents a share on an adjusted basis. And the company saying that it's standing by the full year forecast that it had previously given on operating margins and adjusted EPS. Katie.
All right, let's also look at Raymond James. Just an embarrassment of riches here. Fourth quarter adjusted EPS, it beat estimates actually. Adjusted EPS for the fourth quarter coming at $2.95. That's a big beat versus the estimate of about $2.43. Net revenue for the quarter at $3.46 billion, also ahead of estimates of $3.31 billion. You can see shares not really moving too much. Of course, traders chewing on that, deciding what to do, but fourth quarter adjusted EPS does beat estimates.
All right, we got shares of IBM down 3.3%. The company's third quarter revenue came in below estimates at $14.97 billion. Estimates were for just over $15 billion. Third quarter operating EPS came in above estimates at $2.30. Third quarter free cash flow coming in just shy of estimates at $2.06 billion. All right, guys, lots of earnings. We're looking at what's going on with Tesla. Shares are surging in the after hours. Taking a look right now, higher after the company said it expects slight growth in vehicle deliveries in 2024. Shares up after third quarter adjusted EPS also beat estimates. We're going to continue our coverage on radio, on TV, on YouTube. Same place, same time tomorrow. This is Bloomberg.